the richest 1% in the world, investing is a survival skill. It is their core business. To the rest of us, investing is a side hustle. This mindset has been challenged on this particular series. If you're tired of living from hand to mouth, if you're tired of the rat race, I dare you to watch this series on why everyone must invest with purpose. Enjoy. Investing with purpose means that every investment you make must have a tangible goal. The goal is not the money. What will you do when you get the money? I will take my kid to education, I'll do this, we'll come to that. But there's a story behind this. They say life is the best teacher because of experiences. When I started my career like any other investment professional, my greatest pride was to make money. How can I make 20% every year? How can I make 35% every year? How can I make 50% for my client? How can I make 100%? And the more money that I would make, the more I would earn in my bonus. And the more my fellow teammates would also earn. So that was the objective. It's sort of feeding your ego. I remember we invested in a company called Kabasid in Kenya. We put 418 million shillings there. And a couple of months later, just about 2 years, we exited with 1.2 billion shillings. Like, if we can do this in Kenya, can we also do it in other countries? I remember we went to Ghana. Ghana found a company that was called Calbank, very similar to what we know today as NCBA. Then it was called CBA. And we tracked that company for 2 years. And eventually, we made a decision to invest. We put in 300 million sometime in October 2011. And March 2012, that it had grown from 300 million to 900 million. We sold half of what we had bought and repatriated the money back to Kenya. So that was very fulfilling for me because I proved that one, I can make money outside Kenya, and two, I can bring back money to my country safely. From there, we went to Tanzania. We found Tanzania breweries was significantly undervalued compared to where the price was supposed to be, for very good reasons. Because of regulations, Tanzania can be a very strange place to invest in, but that creates pockets of opportunities. And this probably in my career was the biggest opportunity I've ever seen. I wanted to invest $20 million, but I was granted 800 million as an approval to invest. We put in 800 million, and about 28 months later, very surprisingly, it matured much faster. I sold off, and I brought back 3.3 billion shillings. It was one of the best years for me and the team. Then there was Rwanda. Rwanda, they didn't have a stock exchange. They were just starting their stock exchange. It was extremely risky to put money in Rwanda because the structures were not in place. But I had learned the ropes of investing outside the country and navigating the terrain and mitigating the risks that come with every unique place that I invest outside of Kenya. So I remember I wanted to invest 100 million, but I could only get 40 million worth of, it was called Brarilwa, the equivalent of EABL here. 40 million, a couple of years later, not too long, brought back 256 million shillings. So that was very satisfying, and this thing called investment works, and this thing that I've been trained on how to identify opportunities where others are not able to see. I can see we have a philosophy and it is working. That was good. But the challenge with that is that once you make the money, you forget. You're only as good as the last deal that you did. You forget it and you start all over again. There was a small story that was developing, which I did not know would change my entire investment philosophy. And that began in a very unfortunate circumstances. One of our colleagues called Michael Sumba was diagnosed with cancer in 2006, March, and by July the same year, we were in Budalangi to bury him. And when we were there as a team, we realized that his mother had 10 sons, and on that particular date, she was burying the 10th son. So Michael's mother was called Madame Rosalia. Very sadly, she was burying her 10th son on that day, and her 9th son that day. So there was only one surviving son who was the firstborn, and who was mentally ill. So it was a very sad story, and it also made us understand why there were people always at our reception asking for Mike. Can I speak to Mike? We used to call them, and jokingly, Mike, your constituents are here looking for you. But clearly there was a story behind that. So we came back very disturbed, each of us individually thinking about it, and we sat down and we looked at what he had put on his beneficiary form, just in case anything would happen. And nobody expects to die when they're 39 years. He had said, please divide his beneficiaries, his benefits into 4 equally: his mother, his wife, his son, and his daughter. The children were minors, so that was easy. We needed to separate their money, and we needed to set up trusts for each one of them. The wife was a major. That was clear. We'll send that money to her, and which we did, and I think she bought a house to stabilize her family. That was a very good move, and I respect that lady. She's called Sabina. So if she sees this story, I honor her. She's an amazing, she's been an amazing lady. And then there was the old lady, Madame Rosalia. We sat and we were like, this was our biggest concern. She has so many people to support now that Mike is not there, especially children who are going to school, and the widows who are left behind. So we said, if we send this woman, even though she is a major, if we send her the money, everybody will know she has money. She could even die. Her life could easily be at risk, or the money will disappear very quickly, and a lot of people along that chain would have a very difficult life going forward. So we called them to the office and we made a proposal. We made a proposal. We were going to form 2 trusts for the 2 minors, which was easy to accept. But the old lady, we said, this is a special request. Can we form a trust for you also? And then we'll use the trust we'll be sending you money every term when it is beginning, so that you can be able to fund the education of these children. And she graciously accepted. She didn't have to, but she accepted, and with the support of Sabina, Michael's wife. So I remember sitting in front of my laptop and imagining the life of every child and saying, okay, this young man is in standard 4. How much will it take for him to get to standard 8? How much will it take for him to go to high school? Where is he likely to go to college? I remember thinking it must be Strathmore, and then there will be 4 years of university. given where the cost of education today and all the inflation that will pile up during those years, how much is education likely to cost those many years from that particular date? And then once those numbers were in front of me, like, okay, what do we invest in that can be giving us money every so often so that we can now pay these costs that I can see will be coming the next 10 plus years? We formed portfolios for each of them. Madam Rosalia, the son, and the daughter. Today, as we speak, as I sit here, the young man who was then in standard 4 finished high school, finished college, finished university, and his portfolio, which is was a gift from his father, is still intact. It has not gone below what was left by the father. In fact, it is more than what the father left behind. The same thing for the daughter, and the same thing for Madame Rosalia. So it has given me the greatest satisfaction, because it is not just money that we have made for them, but these are lives that we have changed. It is as if Michael has been alive the last so many years and continues to be. So these are now young adults, and that old lady who's unfortunately she passed on this year has also educated so many people through this particular trust, and the money is still there. The principal money is still there. So we were just using the interest, the returns that we were generating to pay for school fees, to do the shopping. And I said, wait a minute. Why do I feel so much joy? I feel I am doing something meaningful with this particular portfolio than any other portfolio. And this question popped in my mind. Why do this for people when they die? Why can't we do it for people when they're still alive? And that was the beginning of investing with purpose. See, I want to do this when before your child even starts school, I want to start doing an education portfolio for you, so that when your child is going to university, you will not have to remove a coin from your pocket. What if I help someone to build a home 5 years from now, debt-free? What if I help someone to buy a car straight from the showroom 5 years from now, debt-free? That is investing with purpose. And that's how we started. And we have now so many other testimonies. I have seen professionals, high-flying executives, leave their plush jobs and get back their 8 hours and not have their lifestyle deteriorate, but maintain the same lifestyle, while they do the things they love to do every single day of the year. Even get other jobs, new jobs, but the jobs they are now doing from passion. I said, if we can do this for everyone, we will change. It is so difficult for me to go and sell to that person who is in the slum that you need to invest in a product to make 5% or 10% or 20%. 20% mean nothing. The question is, what can I do for you who is in the slum? Can I help you to educate your child, whether you are alive or otherwise? Your child is guaranteed will go through school, and this portfolio will take care. So I realized this is what wealthy people do? Wealthy people, they create their wealth like a staircase. Once they're at 1 million, they never go to 900. Once they're at 1 million, they will use the fruits of the 1 million to fund their lifestyle. Yeah? And as they continue to pay themselves back, they will go to 2 million, and then they are funding their lifestyle with the 2 million. But the 2 million is not going anywhere. And they get to 1 billion. It is always upward and forward. What do the rest of us do? We earn whatever we earn. We pay for school fees, our wealth goes down, and then we start again. We build some more money, we buy a house, our wealth goes down, and then we start again. And that is where investing with purpose comes, because it now helps someone to build a steady growth of wealth over a period of time. And that's what I'm saying. One of the amazing things is as if Mike is still alive, because the money he left behind in 2006 is still intact plus more, but he's already educated his children when he's not here. His wealth is still working. His wealth is still working for him. His wealth is still working for his children. Now, his son can actually take this further and say, I want to maintain this trust to now educate my child. It is upward and forward. And that's the trick. If we are chasing returns, we are unlikely to build sustainable wealth. But if we think in terms of goal-based investing or investing with purpose, we are likely to not only to create wealth, but to sustain wealth for generations.